Hello, everyone, and welcome to another edition of COVID-19 Power Lunch, our twice-weekly video series where we discuss new developments and new legislation related to the coronavirus pandemic. As a reminder, I'm Erin Spivak, partner with James Moore & Company, and I'm the moderator for the series. Over the past month, we've received a lot of questions about loan forgiveness for the PPP loans. And although we're waiting for additional guidance to be released on this topic, we wanted to share with you what we do know, what we don't know, and any recommendations we currently have to help you maximize your loan forgiveness. Joining us for the discussion is Nadia Batey, partner with James Moore, and Carrie, Boynton, manager. Nadia and Carrie, let's talk about what we do know and what's been in the news recently about the PPP loan.
Thank you.
Hey, Erin. Yeah, so 4 short weeks ago, the CARES Act was signed into law, and then we have what we now have of the PPP program. On April the 24th, we had the second phase of the PPP program, and as of today, only about $200 billion of the $310 billion of the second phase has been loaned out. So there's still additional money to be loaned out for those applicants who have not applied through bank or online portals at this point. And there has been a lot of media coverage lately about publicly traded companies receiving the funds, paying it back. And we've had a lot of questions from clients, should I be concerned about paying those funds back? So we just kind of wanted to go over, what kind of instigated those public companies to send the funds back, things that clients should do to kind of document their economic uncertainty at this point, and just talk about those points for just a minute. So when an applicant received a PPP loan, they had to certify 2 pieces of information. And one was that under the current economic conditions, that there was uncertainty that made the loan request necessary to support the ongoing operations of the applicant. And the second certification was that the funds would be used to retain workers and maintain payroll, or be used for other allowable costs such as mortgage interest payments, lease payments, and utility payments. So there's a lot of uncertainty about what the SBA considers economic uncertainty. What we do know is they have said that if an applicant has the availability of liquidity, and maybe they didn't require the loan, maybe they should pay those loans back by May the 7th. And so this has been a very frustrating point for many of our clients because there's so little guidance on what does economic uncertainty mean, especially when the SBA throws around words like fraud, audits, maybe potentially even making the list of loans public information. So our guidance at this point is just to tell clients to make sure you document in detail your rationale for why your company had economic uncertainty, what was your employment decisions would have been before or after the PPP loan, what other options you had for funding, and then the potential of on your business for those options. And then the date to remember is May the 7th, that this is the date to make a decision as to whether or not to keep the funds or return the funds back to the SBA. So we would recommend if you have concerns or questions to reach out to your attorney or tax advisor and just ask, lay out your set of facts and ask for some advice in this area.
Yeah, Nadia, they've been sending, even the banks have been sending emails to people who got the funds 2 or 3 weeks ago, correct? And
Yes.
I just clarify, that's not the bank telling you should give it back, right? They're just making sure you're aware of the rule.
That's correct. So we have had several clients that have emailed us those letters and said, hey, the bank's telling me I should give the money back. And no, that's not the situation. The bank is just making sure that their clients or the loan recipients are aware of the rules and of that May 7th deadline.
Yeah, it can be a scary email to get all of a sudden and not understand what it's all about. So that's good. So,
Absolutely.
Yeah, so let's kind of pivot to, if you've already received your funds or the approval number for the SBA, what are kind of the next steps?
Thank you, Erin. We've gotten that question a lot from clients who are very excited that they got their PPP funding and now they don't know what to do. So as of today, the day that they receive the cash is the start of the 8-week covered period. The AICPA and some other bodies have sent a letter with recommendations to the SBA that would alter the 8-week time frame to be more convenient for borrowers to calculate their covered payroll expenses. Basically, they want to keep the 8-week time period in line with pay periods. But we haven't received any updated guidance yet with that 8-week time frame. So as of now, the time frame starts whenever they receive the cash. So what they need to start doing is planning on how they will actually utilize the funds. So they need to start looking at different budgeting scenarios. And most importantly, they need to make sure they understand the basic rules and guidelines around the PPP funding. So they need to make sure they're receiving updated updates timely. And most of you who are watching this probably are staying up to date from your CPA or other sources, but make sure you're subscribing to emails and checking in with your CPA periodically for updates, because we do receive them almost on a daily basis at this point. And I've also received the question as to whether or not you should have a separate bank account to hold the PPP funds. And the answer is no. There's no requirement that you have to have a separate bank account, but if you'd like one, certainly you could use a separate bank account. In terms of bookkeeping and how to record the loan proceeds and the expenses paid with those, you will need to set up a new loan account in your chart of accounts to book the proceeds. However, there's no special bookkeeping that you need to do at this time for recording the expenses. You can just record those how you normally would. If you would like to change your accounting to make it easier for you to track your expenses, you certainly can do that. I've also received questions as to whether companies need to tell their payroll company that they've received PPP funding, or if they need to do anything differently when they're running their payroll. And at this time, they don't have to tell their payroll companies. They certainly can if they'd like to. We're hoping that payroll companies will be able to generate a report set for their clients based on the 8-week covered period, similar to the reports they were generating for the PPP loan applications. We don't know if they'll be doing that, but they may, and so then they would need to know whenever your clock started. And last but certainly not least, they'll need to start accumulating the documentation needed for the forgiveness calculation. And that documentation will look different for each company based on how they calculate their full-time equivalents, their payroll expenses, and other covered costs. But we know that they will need payroll reports, support for the healthcare benefits they paid, the retirement plan benefits paid, rent payments, utility payments, and mortgage interest during that 8-week period. So that support could be invoices, receipts, check stubs, basically anything to support the payment itself. And so, as I'm sure you've heard over and over again, we still don't have final guidance from the SBA, and there's still a lot we don't know. And that being said, Nadia, can you go over what we do and don't know at this time?
Yeah, so we'll start with the allowable uses of the loan, because that's another question that we're getting from clients as they receive their funding is, hey, what can I use the funds for? And in the PPP legislation, it gave us a list of exactly what those funds could be used for. So the first one, of course, is payroll cost, Payroll Protection Program, payroll cost. That includes employees' salaries, commissions, and other types of compensation. That also includes like group health insurance, retirement benefits. Those are all included in payroll cost. There's some other allowable uses of the loans also, such as interest on mortgage obligations, rent. The rent agreement does have to be in place by February 15th. Utilities can include like your electric, your gas, your water, telephone, internet access, and then interest on other debt obligations that maybe aren't mortgage obligations. And so this is a really good distinction to make, is that there are allowable uses of the loans, but maybe those costs won't be calculated in the forgiveness portion. And that interest is one of those categories. So interest on debt, mortgage obligations are includable in the forgiveness calculations, but interest on other debt obligations are not includable in the forgiveness calculation, but it's still an allowable use of the loan. So a pretty big distinction there. Other questions that we've been getting for clients are, hey, is this included in payroll, or does this qualify as payroll costs? And some of those items are payroll processing costs. And the answer is no, that payroll processing costs are not included in the payroll definition. Also remember that any compensation is in excess of $100,000 per person is not includable. And then the big one is the employer portion of FICA is not included in payroll costs or the forgiveness calculation. So the employer portion of Social Security and Medicare taxes needs to be completely excluded from the use of the funds and the forgiveness calculation. Another question, yeah.
Real quick, I can ask a question. On the compensation of $100,000, does that just mean like you can't pay someone more than $100,000 in that 8-week period, or are you looking at a bigger time period?
It's $100,000 per year. And the one thing to remember about the $100,000 per person per year is that does not include health insurance and retirement. So the health insurance and retirement for the covered period can be added on to that amount.
And so it would include, like, if you pay people an average salary of like 50 or 60,000, but they got the same amount in bonuses throughout the year, they potentially would be already they could be an over 100,000 employee, even if they hadn't made that year to date.
Correct. Yes.
Yeah. I think that could trip a lot of people up.
I think this whole calculation, there's aspects of it that are going to trip a lot of people up.
So I would definitely say if people have questions, they should ask their CPA or their banker, probably their CPA at this point, on how the payroll fits into it.
Right. Yeah.
So Nadia, I know one of the big questions we also get is related to workers' compensation, if that is includable as an allowable expense.
Yeah, we have been getting that question a lot because most people assume it's related to payroll or it's associated, based on their payroll costs. But unfortunately, no, workman's compensation is not a payroll cost, or can it be included in the forgiveness calculation? Okay, so one item of clarity that we have received from the IRS is Friday that the IRS released a notice regarding the loan forgiveness being includable or not includable in gross income. And so the IRS has pretty much said, hey, the loan forgiveness is excluded from your gross income, but the qualified expenses are not tax deductible. A lot of people believe that this is contrary to the intent of the actual law, that they believe that the intent was that the expenses would be a deduction and then the loan forgiveness would be excludable from gross income. This is an area that the AICPA has already released a statement so that they're going to be challenging the non-deductibility of the qualified expenses, because in effect, there's no tax benefit. So it actually becomes somewhat of a taxable income item. But without congressional intervening, without Congress making some sort of law or rule on this, these are the rules that we have at this point in time.
So Carrie, I know that there is certain steps you have to walk through in order to get your loan forgiveness. Can you kind of talk us through what those steps are?
Yes. So we've broken it down into 4 steps. I'm probably not going to go into extreme detail on any of these steps because, like we've said a few times, we're still waiting on final guidance from the SBA. So just to keep it a little bit general, step 1 is calculating the amount eligible for loan forgiveness. So that's where you're going to start in this process. So you're going to need to gather the amounts incurred or paid for all eligible costs. You're going to calculate the percentage used for payroll costs and the percentage used for non-payroll costs. It's very, very important that at least 75% or more of the proceeds are used for payroll costs. There's 2 interpretations of this rule, but either way, it's crucial that you use at least 75% for payroll. So the first interpretation is an all or nothing rule. And this basically says if you don't use 75% of the loan proceeds for payroll costs, then none of the loan will be forgiven. The second interpretation is a bit more forgiving. It's more of a prorated approach where you'll still be penalized if you don't use at least 75% for payroll, but there could still be some amounts that would be eligible for forgiveness. The other important part of step one is that any proceeds from an advance up to $10,000 on the economic injury disaster loan would be deducted from the loan forgiveness amount. So step two is calculating the full-time equivalent reduction. Borrowers must maintain headcounts as loan forgiveness will be reduced if a business decreases its full-time equivalent employee headcount. Now, this is not an all or nothing approach. So this would result in a percentage of reduction, but it wouldn't completely exclude you from getting some of your loan forgiven if you do reduce your full-time equivalents. So to do this, you would start by calculating the average full-time equivalent employee headcount during the covered 8-week period. Then you would compare that to your full-time equivalents during one of two prior periods. It's important to note that you'll actually get to choose which period you use. So you can either use the time period from February 15th, 2019 to June 30th, 2019, or from January 1st, 2020 to February 29th, 2020. I've had a lot of clients asking me, you know, I've let some people go since 2019. So hopefully this will help people because they're going to be able to use a 2020 time period if they would like to. So this result is multiplied by the loan proceeds spent on qualified expenses to determine the amount that is eligible for forgiveness.
Now, I know, Carrie, for just a second, there's a lot of questions on the FTEs, right? Like how many hours equal an FTE? What if someone doesn't want to come back to work? If I rehire some? This is really where we need the SBA's guidance because there's a lot of questions surrounding this. Wouldn't you agree?
Yes, a lot of questions. And that's why I'm not going into a ton of detail yet because we just don't have those details. But yeah, so it's a crucial thing to know what your FTEs are, but unfortunately we don't have a lot of guidance on helping you calculate that exact number right now. The SBA did come out and somewhat clarify. They said that they will be using the standard full-time equivalent employees to determine loan forgiveness, but we still don't have a technical definition of what a full-time equivalent employee is.
Yeah. And I know another thing that they came out and said is that, like, if you offer to rehire an employee that you would let go and they decline you, which has been a big concern, would that count against you? And I think in their frequently asked question, they said, no, as long as you can document that, yes, you offered it to them and that they declined. And also that employee would no longer be eligible for unemployment compensation at that point.
Correct.
So, yeah, still need a lot of guidance.
All right, so now we've calculated what expenses qualify for loan forgiveness and our FTE reduction. So step 3 is calculating the salary reduction, because if you'll remember, your loan forgiveness can be reduced if you reduce your number of employees or if you reduce their salary by a specific percentage. So you would reduce the forgiveness for any individual who had a decrease in salaries and wages by more than 25%. Now, please note, this doesn't include the employees who make more than $100,000 per year. So what you would need for that is a list of wages paid for each employee or employee role for the covered period, and then you would compare that to the most recent full quarter prior to the covered period. For those wages reduced by more than 25%, the amount in excess is deducted by the forgiveness amount. So there are a lot of unknowns when we get to this step. What we don't know is, do you compare specific employees or do you compare their roles? What if you furloughed or laid off employees who can't or won't return? You know, how do bonuses or commissions or other forms of compensation, how are those considered in the calculation? And then the periods being compared are not necessarily comparable because you're comparing a full quarter to an 8-week time period. So most agree that you will compare the average weekly payroll, but again, there's still a lot of open-ended questions, and we just don't have the details or the guidance from the SBA yet on those questions. So step 4 is the restoration piece. So this is the safe harbor for rehires. So the borrower can reduce or eliminate the reduction of the loan forgiveness calculated in step 2 or step 3 if the decrease in full-time equivalent employee headcount and reduction of wages is eliminated by June 30th, 2020. So ultimately, if you rehire everybody, then in theory, you would be able to get the full loan forgiveness. But again, we're still waiting on final guidance for that piece.
Thanks, Carrie. It sounds like those steps still need a lot of clarification, but at least it's a good outline of what people can kind of look to expect. So Nadia, how do people even go about applying for loan forgiveness? How does that work?
We don't know yet. There's a few things that we do know about the application process. First of all, the application process will go through the banks, and then the bank will submit that to the SBA for approval. But we do have a timeline on the forgiveness process. After the 8-week covered period following the loan origination, borrowers have 90 days to submit loan forgiveness documentation to the lender or to the bank. And then after that period, the lender has 60 days to make a decision on the loan forgiveness. So a lot of unknowns still, like Carrie talked about, documentation, we don't know. We have a feeling that each bank is going to require different documentation again, just like it was during the application process. Every single bank had a different documentation list. I'm sure it's not going to be any different through the forgiveness process. I'm sure that the SBA will develop and put out some new forms, calculation forms potentially, but at this point, we don't have anything.
Well, and in saying that, so if you have 60 days following the 8-week period, and then they have 90 days to submit it to the SBA and approval, if I did my math right, that's at least perhaps 5 months before you even know if your loan is going to be forgiven. And doesn't the payment start 6 months after you get the loan, or 7 months, something like that?
That's correct. So borrowers have 90 days to submit the loan forgiveness, and the lender has 60 days to make the decision on the loan forgiveness. So yes, you're close to your 6-month period at that point in time. Now the legislation does state that that deferral can be up to a year, so 6 months to a year. So we're hoping that the SBA has a lot of leeway in when those payments start.
Yeah, because you wouldn't want to be surprised, but it probably is, assuming that the banks are ready to start calculating the loan forgiveness and they have the right guidance, that you would want to apply as early as possible, so you kind of have a vision of what you're going to have to pay back.
Yes, absolutely.
Okay. And then what are some other common questions we're getting?
Common questions. We're getting a ton of questions, but we just wanted to kind of review a few questions that we're getting on a frequent basis. So one of them is, hey, does payroll cost include the cost incurred during the period or cash payments for payroll? And this comes back to, let's say, for example, that your loan was funded on April the 30th, but then on May the 1st, you had a payroll for the previous 2 weeks of payroll. The question is, hey, does that payroll that I paid on May the 1st qualify? Or is it only the portion that was incurred after the date of loan funding? And this is a question that we can't answer yet, because the legislation does state that cost incurred and paid. So does this mean that it has to be cost incurred and paid, or can it just be incurred during the period or paid during the period? And we will just have to wait for the SBA to kind of give us some more guidance on their definition of incurred and paid before we can answer that question. Let's see, another question that we've gotten frequently is, how do independent contractors and sole proprietors calculate their loan forgiveness? And this is just an interesting concept in general, because when a Schedule C or a sole proprietor applied for the loan application, they actually submitted a copy of their Schedule C for 2019, even if it hadn't been filed at that period and for that period. Based on what we understand so far, you're going to submit pretty much the same exact documentation for the forgiveness calculation. Is just a 2019 Schedule C that you submitted for the actual loan application. And then, of course, if you had any employees, you'd have to submit that employee documentation, or if you use the funds for other purposes, other allowable costs, you'd have to submit those too.
Another question I've received a lot from clients is, if I am down an employee, do I have to rehire someone for the exact same position as the person I lost? And according to the current guidance that we have now, it wouldn't appear that you have to hire somebody for the same exact position. You would just have to hire somebody to be working for the company. Another question we've received quite a bit is, well, what if I had to let somebody go due to performance issues or a reason that's completely outside of the economic situation? And we still need more guidance on this issue. I think, as Erin mentioned before, if you had to let an employee go because of the economic situation, of course, you could bring them back on and they could come back or they could refuse. But if you had to let somebody go because of performance issues, you certainly wouldn't want to bring them back on, you know. So we do still need some more guidance around this area. And as of right now, we think they're just looking at employee counts for the FTE count, and we're not really sure how it would play in with the 25% reduction in payroll by employee. A question that I've received quite a bit, especially right now while we're lacking guidance, is, do I have to pay my employees weekly over the 8-week period, or can I wait a couple weeks for more guidance and then catch up during the next 6 weeks? And at this point, there's no indication that this will be a weekly calculation. We expect it would be more of a cumulative average over the 8-week loan period. So we don't see an issue with that. But again, we don't have any specific guidance to answer the question just yet. And another question I've received is, do I have to spend it all during the 8-week period or before June 30th, or can I wait until after my business reopens? Because a lot of businesses aren't even open right now, and a lot of their employees aren't working right now. A lot of clients would like to sit on the loan until they reopen and then start using it to pay people. However, we're not sure if that would be allowable or not. Currently, under the guidance that we do have, since the 8-week period starts when you get the loan proceeds, you would need to start using it during that 8-week period after you get the loan proceeds for the cost to qualify for forgiveness.
So Carrie, based off of that, would you recommend that someone waits, until guidance comes out to start spending the money, or based off of what we know now, should they go ahead and rehire the employees, even if they can't reopen completely?
It's really a tough call, and it's going to be really situational. I mean, I think we're all crossing our fingers that we get guidance as soon as possible, hopefully this week sometime. But if you got your loan proceeds last week, you're not going to want to wait too much longer before using it to pay people and some of these other costs so that you can get the full forgiveness, because you only have that 8-week period. And if you don't start using it until 4 or 5 weeks after you get your loan, you're not going to have a lot of time to make those payments that qualify for forgiveness.
Hey, Carrie, a question that we've also been asked related to what you were just talking about is, can companies pay their people what they normally would be making, or can they pay them additional wages or bonus compensation to kind of make up for that 1 or 2 week period that they potentially weren't paid? And the answer is, we're not sure. We think it's yes, but ultimately we're just not sure, and we'll need additional guidance from the SBA to say, hey, that this is okay to do at this point in time.
So Nadia, I know one that's come out in the news that you kind of alluded to a little bit beforehand, is that the SBA is actually going to audit some of the loan forgiveness applications. Particularly, they specified if you got more than $2 million in loan proceeds. And the word audit can be very scary. Can you kind of describe a little bit what we think those audit procedures are going to be and what they're looking at?
Yeah, we can talk about what we think they'll be. So what we think the SBA will be doing is just taking a deeper dive into exactly what those payroll costs are. Auditing, hey, did you actually have the payroll costs, tracing them back to payroll journals, checks, and making sure that there's not any type of fraudulent activity going on. So through the application process to apply for the PPP was somewhat simple. But through that audit process, you will probably have to provide a lot more documentation.
No, that's good. And I think, again, they want to catch that no one is being fraudulent per se and making up employees or making up payments in order to qualify for the forgiveness. But again, if you're doing everything as you've been told to do, you should be totally fine. And also, we go back to what we talked about, documenting the uncertainty, the economic uncertainty that you needed the loan and all of that, which you should be doing as of now. So.
Exactly.
So thank you, Nadia and Carrie, for again joining us, talking about what we know, what we don't know, what people can be doing as of today before we get additional guidance. As soon as the SBA issues their interim rule related to loan forgiveness, which we've been saying now for 3 weeks, we expect it this week, so hopefully we actually get it. We will be updating our website. We'll be sending out most likely an e-blast and probably doing a webinar again on it with the actual steps. But please don't wait. If you have questions, reach out to your CPA or email us a question at info@jmco.com and we'll do our best to answer it. And hopefully we'll get all this additional guidance that everybody's anxiously awaiting for, so we can follow the rules and follow the SBA guidance in exactly the order they want us to do it, because I know that everybody is anxious related to this. So again, thank you again for joining us, and we'll see you at our next COVID-19 Power Lunch.
Thanks, Erin.
Thank you.